One, two, 1, 2, 3, 4.
Hi, folks. Welcome to the Sales Hacker Podcast. This week is yet another amazing episode. They're all amazing. What can I say? I'm biased. I love the sound of my own voice. This is episode 24, and we've got Tomasz Tunguz. Tomas is a managing director at Redpoint Ventures, really well known in the SaaS world for a lot of the data and analysis that he's done for benchmarking great companies. He's also a wonderful person. He was on my board when I was at Axial, and he's since become a very prominent and noteworthy figure, both for the acuity of his insight, the success of his investments, such as Looker, and also just the fact that he's a nice guy. He really tries to be a good person, and it's a wonderful interview. Now, I want to thank a couple of the fans that have been reaching out. It really it's awesome. So we really appreciate you listening. I get feedback, which I really appreciate as well. And so we want to know what you want to do differently on the show. We want to know how we can improve. And we want you to share the content with your folks and with your friends. So James Bishop at Underwriter Labs, he listens while he's working out. He gave me a lot of good feedback about a recent episode. James, really appreciate your listening, and thanks for giving us those insights and that feedback. Tony Perzow, Rebecca Wetton, Wetten, she reached out to me, based in the UK, excited about what we're doing over here at the Sales Hacker Podcast. Bernie Borges, who also runs the Social Business Engine podcast. I'm sorry if I said your last name wrong, Bernie. And then Charles Kirkland from the Kirkland Media Group, who wrote me just a simple note, great podcast. So Charles, thank you for the feedback. I want to talk about our sponsors. We've got two. The first is AirCall, and I've talked about them a bit. They are a phone system, and they're designed for the modern sales team. So AirCall, what they do is they seamlessly integrate right into your CRM, whether that's Salesforce, HubSpot, or something else. They eliminate all data entry for your reps, and they give you much greater visibility into your team's performance through advanced reporting. When it's time to scale, you can add new lines in just minutes, and you can use in-call coaching to reduce ramp time for your reps. So here's the website. It's visit aircall.io. So aircall.io/saleshacker. That's aircall.io/saleshacker to see why Uber, Dun & Bradstreet, Pipedrive, and thousands of others trust AirCall for their most critical sales conversations. Our second sponsor is Outreach.io. They recently acquired Sales Hacker writ large. They're the leading sales engagement platform. Outreach triples the productivity of sales teams, empowers them to drive predictable and measurable revenue growth. By prioritizing the right activities and scaling customer engagement with intelligent automation, Outreach makes customer-facing teams more effective and improves visibility into what really drives results. That website is outreach.io/saleshacker, and go there to see how thousands of customers, including Cloudera, Glassdoor, Pandora, Zillow, rely on Outreach to deliver higher revenue per sales rep. So thanks so much for listening, and here is our episode with Tomasz Tunguz. Hey, everybody, and welcome to the Sales Hacker Podcast. We are incredibly excited to have one of the celebrities of the SaaS world, but also somebody that has positioned himself and sort of built his career as a true thought leader when it comes to recurring revenue businesses. And I'm speaking, of course, of Tomasz Tunguz. So let me first tell you a little bit about Tomas, and then we'll chat with him. But Tomas is a managing director at Redpoint Ventures. He invests in early-stage software and infrastructure companies. If you don't know about his blog, you should. So it's at tomtunguz.com. That's TOMTUNGUZ.com. And he wrote a book called Winning with Data. Tomas has been a product manager at Google, a software engineer at Appian, and he also founded a small startup, and he works with industry-defining companies at Redpoint like Stripe, Twilio, Snowflake, Looker, Zora, Sonos, which IPO'd last week, and Duo Security, which was recently acquired. So welcome, Tomas. We're super excited to have you.
I'm thrilled to be here. Thanks for inviting me on.
Thanks for joining. So what we want to do there's probably like 3 people in the startup world that don't know who you are. So for those people, your name is Tomasz Tunguz. You're an MD. Redpoint Ventures, for those that aren't in the know, tell us a little bit about Redpoint.
Sure. Redpoint is a venture capital firm based in California. We've been around for about 20 years. We manage about $4.5 billion in capital, and we invest in consumer and enterprise companies at seed, Series A, Series B, and growth stages.
Wonderful. Do you have a sector focus for your investments?
I do. I focus on software as a service and infrastructure.
And is there a stage, A, B, C, that you're specifically focused on?
Seed A and B.
Okay. And then some of the flagship investments or some of the companies that we should know about that you've either been on the board of or assisted with or invested in.
Yeah, one of the companies I work with is a business intelligence company called Looker that's based in Santa Cruz and growing incredibly quickly. We're about somewhere in the neighborhood of about 500 employees, and we invested at the Series A there.
Wow.
Another one is a company called Dremio that's in the data infrastructure world that's started by two of the key management team members from MapR, and the rest of the management team is from MongoDB, and that's a data virtualization company that's growing really nicely. And the two last, one is called Chorus, which many of the people in your audience might know. It's a sales intelligence company that has proprietary natural language stack that allows it to do all kinds of interesting things with phone calls that salespeople might have. And then the fourth is a customer support company in New York called Customer that's founded by the team that built key pieces of the Service Cloud at Salesforce.
Oh, wow. Well, to your point, I think a lot of us are familiar with Chorus and a lot of us are familiar with Looker, to be honest, just because business intelligence is a key piece of, what's happening with companies. You have to be able to turn your data into insights.
Absolutely.
I know you believe that. Winning with data author over here.
That's right. I love data.
So tell us, how did you get here? How did you get into VC? And walk us through, there's a lot of people out there that one day they aspire to be Tomasz Tunguz. They aspire to be a partner at a blue chip Tier-1 venture capital firm. How did your journey start?
Yeah, I'll take you back to when I was about 17. My dad sent me to South America for an internship, and my dad and I started a company together.
Oh, wow.
And he was the one doing the engineering, and I was the one doing the selling. And we built a legal software company that's doing document management and billing systems for law firms that had customers that operated in different languages. So I sold, my first 3 or 4 sales were in the $20K to $50K range. And I remember coming back from that, about a year-long adventure, and I felt transformed, and I just loved, and I was basically bitten by the bug of startups. And it was a wonderful experience, but I knew that I had a lot to learn. And so I went to school and I studied mechanical engineering and computer science. And when I graduated from grad school, I went to work for a startup in Washington, D.C. called Appian that was started by 3 Dartmouth alums who had left MicroStrategy, which was a big business intelligence company. And I was a Java engineer. And I worked there for about 10 months, and it was a really wonderful experience. The company actually went public about 3 years ago. And I learned, that was a 70-person company when I joined, and I learned what it was like to build enterprise software and sell enterprise software at a different scale. We were a government subcontractor, and so I was working for the Department of Homeland Security.
Wow.
We were selling software to them. And so it was just I was working on large-scale Oracle databases, and I understood at least that part of it.
What were the deal sizes, when you're selling to Department of Homeland Security?
They were multi-$100,000 deals, I think. It's a long time ago, but yeah, they were multi-$100,000 deals. And I wasn't the one doing the selling. I helped a little bit in pre-sales, which was putting the demos together and modifying the platform that we had built. And then I also did fulfillment and a little bit of platform work.
Fantastic.
Yeah, it was. I met some really wonderful people there. It was great. And then I went to work at Google. I'd read about this place in California, and I remember interviewing there, and the recruiter took me after my morning interviews. He took me to lunch at this place called No Name Cafe, which no longer exists. And the thing that stuck out to me was, one, lunch was free. I'd never seen that before. And they had this huge bowl of raspberries, enormous. I mean, buckets and buckets of raspberries. And I was like, wow. I can't believe I can have as many as I want.
And raspberries are a luxury fruit. A lot of talk has been, going around about how blackberries are really kind of inferior to raspberries. So to have that many raspberries.
Well, the crazy part is, when I was working at the startup in Chile, labor there was much cheaper. So we would drink raspberry juice in the mornings. I was like, wow.
So this felt like going back to Chile.
That's exactly right. But so my GPA when I graduated school was low. It was about a 3.3, and Google had a 3.5 requirement. And so they wouldn't hire me as a product manager and engineers, but they hired me as a customer support person, like a customer success manager in one part of the business. Because I was new, they gave me this new class of companies, which were social networks. And so I became an account manager for some of the large social networks, and then learned how those businesses work, built some relationships, and eventually transferred into the associate product manager program that Marissa Meyer ran.
Yeah, a very famous program.
And so it was a 2-year management rotation program, and then I started building, I was a product manager, worked with teams to build advertising products for social media properties. And so managed the MySpace agreement that we had, and managed the Facebook product that we had for a while, and then also launched the ad product that we had in a bunch of new languages. So we launched it in Hebrew and Arabic. And there was one time where we had to launch it in Eastern Europe, and we had to time the launches. I think it was in Serbian and Croatian, and we had to time the launches exactly the same because otherwise there would be some strong disagreements. It's like
about who was getting preference.
Yeah, exactly right. So that was a lot of fun. And then we also were doing like improvements in Chinese and stuff, and so I learned a lot about statistics, and that's where a lot of my passion for data came from. Google had this view of the world that was incredible because of what we were doing in terms of crawling the internet, and the power of it was just awesome. That's when I first fell in love with data.
Do I remember correctly that were you chief of staff or some senior liaison for Eric Schmidt at one point, or am I misremembering?
I'd never had that position. Each APM had a different role that served the management team in one way or another. So like Pete Kuman, who was the founder of Optimizely, did OKRs for Google, and he worked with Jonathan Rosenberg, who was the head of product. My role was I worked on a bunch of different projects. One of them was like engineering PM and Eng ratios across the board. So how many product managers do we have in one team versus how many engineers, and making sure that kind of worked.
I guess one question, even before we get to Redpoint, what do you, if you're reflective and looking back on, the mixture of skill and luck that led you to, where you are today? You were clearly, despite, 3.3, which is really just a shameful GPA. Despite that, you seem to be progressing pretty quickly through the Google organization, which I'm sure is highly competitive given that it's recruiting some of the smartest people in the world. What do you think you were doing differently, or what certain insights or intuition that you developed into sort of marketable or experiential skills helped enable that success?
Yeah, I think the first thing is I wasn't afraid of taking a step back in my career when I joined Google. I wasn't afraid of that. Like I was, an engineer, and then I became a support rep. And the rationale was, hey, I just need, there's this great saying I think Andy Ratcliffe has, which is when you find a rocket ship, don't ask which seat you're going to get, just get on, And so I had...
That was I remember reading something about, it was like somebody, maybe it was John Doerr, but it was somebody calling Sheryl Sandberg at the time saying the same thing to her. What are you doing futzing around? And I think she was like working for Larry Summers or something, like, get out of here.
Yeah. She is so impressive, by the way. I remember my first day, she gathered all the new employees that were working in her department, and she gave us a talk about her expectations for how we would dress and how we would speak and how we would write, and that we were representing Google to all these millions of people, and that she expected great things from us. And I remember going up to her afterwards, just like totally green. And I went up to her and I said, "You are the most articulate person I've ever met." I was like, I am so impressed.
That is an awesome story. What did she say?
I bet she was just she was really nice. She's like, "Oh, thank you so much. I'm so I'm so excited that you joined." Blah blah blah. But
it's reassuring that even on a micro scale that her skill and her talent is conveyed. So
yeah, she was super impressive. I remember that.
So one thing you said was, you weren't afraid to take a step back, and that got you into Google. What do you think enabled your success at Google?
I think the first thing was I had a plan. I really wanted to be an APM. So as soon as I figured out that was my goal, then what I started doing is networking with people within those teams and understanding what the process was going to be. And then the second thing, which is even more important, is I had a manager who I built a strong relationship with. So let me take a step back. So when I first joined, I had this great manager named Charlie, and I had signed up to work for Charlie. Then about a month later, there was this guy who came in who became our manager. His name is Scott. And Scott is incredibly bright, like PhD out of Princeton and some kind of dynamics of airplanes. I forget the exact field. Was at McKinsey for like 10 years. And he came in and all of a sudden he put us on quotas. And I was like, my stomach fell. And I was like, oh my God, the quota. Are you kidding me? There's no way in the world I'm going to achieve a quota. And, this is why I think it's really good for everybody or lots of people to go and have a quota, just because there's a number there every day that's kind of staring you in the face. And it forces you to kind of move along. But I was terrified. I was like, oh my God, I got to transfer out of this. That was my first reaction. Like, there's no way I can succeed. I got to transfer out of this division. Like, my whole plan is not going to come to fruition. But that ended up actually being one of the most rewarding relationships I've had with a manager. And I learned an incredible amount. Yeah,
I wasn't sure which direction the story was going when Scott entered the picture.
Well, I was terrified. I was really terrified because he's so disciplined in the most wonderful way.
and you had a plan, and then he sort of taught you some of the benefits of just daily accountability, objectively measured.
Yeah, and then he gave me a lot of rope. So what I ended up doing is I had my day job and he would let me do that. And then I started building computer systems for our team. And one of the systems I built was, Google was crawling the internet. At the time, Google AdSense was competing directly with a product that Yahoo had built, whose name I forget. And we were, Scott had this question about what was our relative market share. And so I worked with an engineer on the search team to build a dashboard that would show exactly which sites Yahoo had won from us and which sites we had won from Yahoo. And so that was the first one. And then I built a CRM tool that we ended up using globally for a while called Toothpaste. And so those projects were the ones that allowed me to kind of go to the associate product manager recruiting team and say, hey, I think I'm capable, or let me make the case that I'm capable to be part of this team.
Did the name Toothpaste come from sort of like Larry's thing about a product you use every day, like a toothbrush?
No, it didn't. I wish it had. It would be a much better story. Scott had come in and said, hey, we need to capture all these fields about every customer that we touch. And we're going to do it in a Word document. And I couldn't stand that idea because I'm like, all this information is going to be stuck in this Word document and it's going to be useless. And so I stayed up all night and I built a piece of software called Toothpaste, and I named it that because I needed a name, and it was 4 a.m, and I was like, what am I going to call it? And I went to brush my teeth, and there it was, my inspiration.
Well, I think it's a good name.
Thanks.
I think one of the things that sort of is jumping out. I mean, maybe it's Google's culture, maybe it's you, maybe just how you're wired, but you keep going well beyond whatever the regimented job description would be for whatever role you were in. You're just building things because you need them, and seems to be the hallmark of excellence a lot of the time. It sounds like you keep going above and beyond in the roles that you're in, and you're staying up all night building a CRM, you're building out databases. It seems to me part of, I don't know, is that the culture of Google, where they're, the 20% thing, where they're just saying, go out and do stuff that we didn't ask you to do? Or was that also part of your plan to always over-deliver against whatever the specified job description was?
Yeah, it was definitely a bit of both. Google had this 20% project stuff, and people were encouraged to build their own tools. And that was a really strong part of our culture. And so I'd probably chalk it up more to that.
So you've been at Google for however long, and how did you decide that you wanted to get into VC, maybe versus taking on, being part of a founding team at a startup, for example?
Yeah, I had talked to a couple of startups when I was at Google, and I was like, wow, this is so cool. Then I met my first VC that I ever met, right? And I had read about, in TechCrunch and all these places, about these people who walked on water and were so smart and all this stuff. And I was like, wow, this is a fascinating industry. And I was talking to my wife at the time, or my girlfriend at the time is now my wife. And she's like, this would be the perfect career for you because you're so intellectually curious and you're always on the latest, parts of technology. And so wouldn't it be fun? And so I talked to a bunch of different firms, and I really loved 3 parts about Redpoint. The first was that there was an incredible culture of mentorship and training within the firm. The second was that there was a really strong set of values that drove the firm. And then the third was that I felt at home, that we work together as a team as opposed to a collection of individuals. And so all those 3 really resonated with me. And that's why I came to Redpoint. And it's been an amazing journey since.
How long have you been there now?
About 10 years.
Wow.
And the thing that's really stood out for me is I had no idea what I was doing for the first 2 years. No clue. And I remember trying to read as many books as I could about venture capital. And I bought out of print books. There's this one called Venture Deals that one of our partners, Jeff Yang, was interviewed in. And I read about George Dorio, who's the creator of American Research and Development, which is the first venture capital firm. And I read through all these different things, and I thought I was prepared. And then I walked in on the first day, and it really took me about, and this was unlike any other job that I'd ever had where, at least I had some exposure or understood what the role was. But venture capital is so different. And I think, one of the things that I tell people who want to get into venture is the thing that I never understood about it and took me about 2 years to learn is it's really the closest job in the operating world is field sales.
Wow. I've never heard that before. We're going to unpack that. What does that mean?
Well, so when you're an enterprise sales rep, you are working on really high-value accounts. You're working on developing a relationship. You have very long sales cycles. And there's no playbook for how you win that account. You have to go and figure it out. You got to go and map who matters, who's going to influence the ultimate decision maker. You have to go and find that use case and figure out whether or not this particular team this company is going to be interested in buying your business intelligence software. Like you're basically given a phone and a laptop, and you're like, okay, go do some business.
And is that the same process for sort of nurturing and developing relationships with founders that you ultimately want to invest in?
Yeah, I think it's exactly the same. And basically, it's a little bit different in that, okay, like whatever, I focus in software as a service. Let me go pick a field where I think there might be something interesting. And then it's entirely up to you. Like if a venture capitalist all of a sudden decides customer success software is really interesting, you have to go immerse yourself into that space. You have to go and build a network of people who you think are thought leaders who can help you identify what the right next opportunities are, who can help you with diligence. You have to go network with founders who are passionate about that space and decide which one you want to pursue. And then you have to take all that information, and this is that's in my understanding what a field sales rep would do is then drive it, right? Like figure out who's going to influence it, the angel investors, the previous investors, any of your friends that you have in common. You got to build that kind of consensus or that community around the company to put yourself in a position where you're a trusted advisor. And that's one part of it. The second part of it is there's this market making component, which isn't necessarily transparent to the outside. So a venture capitalist is a market maker between a founder and an investment opportunity in a business, and then the partnership that's inside the firm. What I have to do is when I get excited about a company, I have to not only convince the founding team and that community of people around the startup that Redpoint and we are a great person to partner with, or a great firm to partner with. I have to go back to my partners and say, let me tell you about this really exciting customer support company and why we should be moving forward, and then bridge the gap between the two in terms of what the right financial transaction is in order that underpins the broader business relationship.
And also, the thing that sales executives and really any operator that's not a founder and venture capitalists have in common is that, from my perspective, you may disagree, but I believe that my role as like a sales or revenue leader, it's important, but it's not determinant. And the determining factors are often before I join the company. There's whether it's the combination of the product and the market and the engineering team or the founding team that can crystallize that into something that people absolutely love. And so a lot of my job, which is a lot of your job, I think, is picking the right company. How did you figure that out in the first couple of years? Because I would imagine that there's muscle memory that needs to be developed for you to have to develop a point of view, not just on sort of what space is interesting, but what the factors are that combine for the investment that Redpoint wants to make.
Yeah, this is why venture is an apprenticeship business. It's also nuanced. I have a spreadsheet. Like I've got this huge form that I use to fill out. Every time I meet a company, it's got like 100 fields. Grade different companies on different metrics and attributes. Just to bring it at the highest level, I think what we really care about, we're a firm that really focuses on team first and the people, because we believe that people are the ones that build businesses and people are the ones that shape markets rather than the other way around. That's one. The second thing that we look for is, if it works, can it be enormous and category defining? Our business model is to invest in about 30 to 40 companies per fund and have something like 2 or 3 of those companies generate all of the returns that we need in order to sell or in order to raise the next fund. And so it's a power law business. And so we just have to make sure that if they do succeed, we have those return characteristics.
Were you apprehensive in the early days of Redpoint about, did you have a strategy around pitching companies? Because I would imagine, but you can tell me if I'm wrong, that maybe the first couple, you're sort of nervous, what if they fail, without maybe fully internalizing the power law dynamics and understanding that actually, a good percentage of them are going to fail. That's okay, as long as, the portfolio as a whole returns the right returns. Did you have apprehension about that, or you sort of understood that implicitly?
It took me a while to learn, and it was crystallized my first year. One of our most important investors, we have an annual meeting every year where we go through all the key updates and developments in Redpoint. And at the time, we would have a dinner with our largest investors, which we call LPs or limited partners. And he's this very tall, imposing man. He's one of our LPs, and he puts his arm around my shoulder and he says, "Tomasz, I have a question to ask you." I'm like, oh my God, this is so intense. You know what I mean? Because it's like, I'm the youngest guy. I feel like I know nothing about the industry. Here's like our most important investor. And he puts his arm around my shoulder and he says, "I'm going to give you 2 options and I want to hear your answer." And he turned everybody at the table and he said, or around us, and he said, "I don't want anybody to interject." He said, "If I gave you an option of investing in a company that was guaranteed 5x or a company that could be 100x with a 1% probability, or whatever it was, and a total 0 with a 99% probability. Which would you choose? And he said, think very carefully before you answer. And I was like, oh my God, I was sweating bullets. And so I said the second one. And he said, that's the right answer every time. He said, if you're not losing money on investments, you're not taking enough risk.
That's a hard lesson to fully digest, particularly if you're an operator.
Yeah. But let me tell you another story. So there's a buddy of mine who works at a hedge fund, and he's highly leveraged positions. Like he's trading billions of dollars in notional value. And I got drinks with him one night, and he said, I lost $50 million today, and I lost my job on one trade. I was like, oh my God, that's crazy. I said, how are you ever going to find another job? And he said, everybody's calling me. I'm not going to have any issues because there are very few people who are willing to make those bets and be willing to lose that amount of money.
That is a great story. So at this point, when I met you, of course, Axial was probably one of your first investments, but now you've been doing it some time. You've been promoted to partner. Congratulations. That was a while ago. When you developed that muscle memory of the differences between success and failure for startups beyond, just the team, but what do you see personally? And what data, because you are so data-driven, what data points can you look at an early stage that are indicative of something good going on?
I published a blog post about this. There are very few data points at the Series A that are correlated to success. So you can't look at like revenue growth, and the one that's the most correlated is net dollar expansion in SaaS companies. So if a year ago you have all your customers and they spend $1, how much does that basket of customers spend this year? And that's the one. But even then the correlation is pretty small. So data is really useful in later rounds, and it's really useful as a benchmarking tool. But at the seed and Series A, what you're really looking for is exceptional team market fit. So are these the right people to do this? And then the second thing is an exceptional product. Like a third of the enterprise companies that we invest in have no revenue when we do invest in them. And the vast majority of them have less than $100,000 in monthly recurring revenue when we invest at the A. So we're trying to invest really early on. And so we're really looking for those two attributes.
Is there, after you invest, I guess, and I'll give you someone else's frame, I think someone else said, which is an investor from a growth equity firm that I was having breakfast with, they said, the key number, this is according to this particular fund, is 7 million in new ARR. If at any point in the first couple of years, regardless of stage, if the company can generate 7 million in new ARR, we think that is going to be a successful company. Do you have any frame, or is there a stage at which, like now, that point to that point is the indicator of whether or not the company is going to be successful? I mean, I'm sure it's always different, but like a particularly critical inflection point that you keep your eye on?
The only one that you can say is 100 million in revenue growing at 70% a year. That's when you can go public.
But is there like at 5 million or 10 million or 20 million, there's a point at which like the companies that I see successful, I'll give you my answer to the question. My answer is that the speed at which you can get past 20 million is, for me personally, based on my muscle memory, a very strong indicator of whether or not the company is going to achieve success, breakout success. Do you have any frames like that?
Here's the thing. We've seen, and I'm thinking of two examples in particular, we've seen companies grow very quickly, like 1, 7, 21, 40, and then flatline or fall. In one case, it was a churn issue. In another case, it was not a TAM issue. It was, a total addressable market issue. It was a lack of competitive moats. So there was so much competition that suddenly came into the industry, started giving the product away for free or near free, that even though there was terrific product market fit and they had this great customer base, they couldn't continue to grow at that rate because all of a sudden the market dynamics had changed.
That's super interesting. So question sort of coming from the audience, or the executive part of the audience, is at this point, again, you've got pattern recognition around success and failure, but specifically and particularly because you invest in SaaS, they're going to tend to have direct sales teams. What is like great VP of sales or CRO? Like, what are the differences in the boardroom that you notice between specifically the revenue leaders that you think are really first rate and those that are not as good?
I'll talk about two things. The first is training, and then the second is forecasting. I think the best sales leaders I've seen are consistently training their people, and they're training them in how to sell, how the process works. I'll give you an example. There's one VP of sales that I work with. He came into a company with about 3 or 4 different sales teams, and he spent his whole first year on sales calls and training them and showing them the processes and creating the goals and the kind of the management infrastructure to make sure each one of those account executives was successful. And the results have been, I mean, from my point of view, incredibly impressive just in the consistency of performance, which is really critical. Like one of the data sets I love to look at mid-sized SaaS companies is quota attainment by rep. And in a lot of companies, you see a power law distribution where one or two of the reps is just crushing quota 2x, 3x, and then you have most of the people not really attaining quota. And I think, if you can see an even distribution or uniform distribution or a much more flat distribution across account executive performance, then you have a really great leader.
And so it's not so much, I mean, obviously you want everybody to attain, but maybe it's the distribution of the attainment, because you could have technically 100% quota attainment on a dollar basis, but
yes,
it's 2 people that are closing all the deals and 8 people are not. And so they come in and say, hey, Tomas, we hit the number. And you say, well, let's look a little deeper.
Yeah, because what you really want is you hire a VP of sales, he or she brings in 7 account executives. Great, you start hitting the number. You want to know that if you start hiring 2, 3, 4 sales teams per quarter, that they're all going to become productive. And if you have that distribution where 2 people are carrying the team, you're introducing a lot of risk. I mean, each sales team is going to cost you, I don't know, $500,000. And so if you hire 3 sales teams a quarter or 4 sales teams a quarter, you're talking about an $8 million investment in a year, and you don't see the ROI for that investment for at least 9 months. So it's an awfully long time to wait to see that. So you need to have some confidence in the consistency of quota attainment, and it's the sales leaders who bears that responsibility.
The second thing that you mentioned is forecasting, or forecasting accuracy, which is undoubtedly directly related to the consistency of the performance of the sales team. Are there other dimensions of forecasting that you think a good VP of sales or CRO embodies or deploys, or strategies they use?
Yeah, I think having really clear definitions and requirements about what goes in the pipeline seems really obvious, but doesn't happen with any consistency across sales teams even like the language from company to company is different, but like what is qualified pipeline, what is, one of the CROs I work with has this thing called available to close. He uses that one. Another one says commit is a term that he uses. And so what ends up happening is the board members, you go from company to company and the definitions everybody is using are totally different. So I wish the industry would actually adopt some standardized definitions. But the second is, I think it's really important for both board members and the sales team to actually have very clear definitions on what exactly goes in which bucket. The last part about it, I'd say, is making sure, and we see this through Chorus, like the fraction of sales teams or leads that actually meet BANT or MEDIC or whatever, and the account executives that actually go through and figure out, okay, have I done budget, need, timing, authority? It's like less than 10% of account executives with leads do that. And so there's just not a discipline that's reinforced even at the most senior levels of most sales organizations.
The discipline of rigorous qualification before you count pipeline. In fact,
exactly.
Me and my head of ops were just talking today because we're putting all this infrastructure in place, and it's what pipeline number are we going to report to the board? Are we going to report when we set the meeting or after they meet the qualification standard? And I said, after the qualification standard. I'd rather have a low number now than have to lower it later.
Yeah, for sure. Yeah, exactly. And so I think, it's basically managing the organization below you well, and then managing the team above you well. I think that's what great executives do.
So one of the things that you mentioned, Tomas, was, I had asked you the question, how much does a VP of sales, how much impact do they have on the growth trajectory of the business? And you said a lot. And you said the strongest structures are those built in tension. And tell us what you mean by that.
Yeah, if you think about the Golden Gate Bridge, and I think about it a lot because we're in San Francisco, the reason that bridge is so strong is because there's a cable that's attached to both sides that's pulling the bridge on each side and making sure it stands up and withstands earthquakes and all that kind of stuff. And I believe management teams, really great management teams, are built exactly the same way. And there's this tension that's always existed between sales and marketing. I believe that that's really important and should remain. And there's a tension that should exist between sales and product, and that's really important. And it's only because you have those tensions and the fact that each of those teams can challenge the other that you can really achieve really terrific things. That's what gets people to push each other. Yeah.
You feel like a CRO that has sales and marketing reporting up through them, where marketing has de facto alignment with sales by virtue of reporting to the same department head. You have a problem with that, or that's not your preferred org chart?
Well, it's fine if the marketing leader can exert and can pull on at the next level, at the VPS, VPM level, if they can challenge each other. If the CRO comes through the sales organization, you might have kind of a lopsided org where there's kind of a preference to favor the sales point of view as opposed to the marketing point of view. Does that make sense?
Yeah, of course it does. I've run marketing in the past, and the other issue sometimes is if you come up from a specific department, my fear was always I don't have enough to teach the marketing organization. I don't know if I'll be able to hire the very best marketers because maybe they don't feel like they're going to learn enough from me.
Yeah, that's a really interesting point.
What's something you believe, we're sort of coming to the end of our time together. So first of all, thank you so much for just participating. We're all big fans of all of the work that you've done. One interesting data point that I think about a lot, and I've actually referenced in some of my own writings, is you did a lot of research on deal size and sort of market segment, and you concluded that there is no conclusion. Tell us a little bit about that work, because it's super interesting that there's sort of like no one way to go to market.
Yeah, this is the thing. I've always looked for what is the optimal seed round to put together, what is the optimal Series A, what is the optimal deal size, what is the optimal customer segment, and I've cut the data, as many different ways as I could have imagined. And then each time I can never get to a statistically significant answer that one is better than the other. Even the sizes of companies, like you have enormous companies that sell to the SMB, you've got enormous companies that sell to the mid-market and the enterprise. And the capital efficiency for each of those businesses is the same or close to the same. And so the ultimate conclusion is you can build a business selling to any size customer. You just have to make sure that your go-to-market motion is optimized for that segment. And so what does that mean? It means you can't hire field sales teams to go after SMBs. It means that, take like Fleetmatics. Fleetmatics is a great example of a company that sold to the SMB with a product that, so let me take a step back. Fleetmatics is a company that sells logistics software to very small businesses. And so if you're a plumber or an electrician and you have something between 5 to 20 trucks and you want to know where those trucks are and whose electricity they're going to fix, you buy Fleetmatics and you pay something like $25 to $35 per truck per month. It's a really low ASP. You're talking about a couple of $100s. And the conventional wisdom in the Valley is like you can't make a business work in that category because you can't hire salespeople because the ACVs are too low, and it's going to burn a huge amount of money because the churn rates are so high. But this was a company that actually raised venture dollars and ultimately sold for something like $3.2 billion to Verizon and was publicly traded before that. And the way they made it work is they matched their go-to-market model to their ASP. So they did end up hiring inside sales teams. And they made these account executives or these sales reps do like 1,000 to 2,000 calls per month. And they got to a point where they would have a 24 to 48 hour sales cycle. And the last really critical part is that they signed everybody up to a 3-year contract.
Within 24 to 48 hours?
Yep.
We'll have to dig in on that one. I'm not sure I believe that.
Well, it's true. It's true. You can look at the S1 and all the 10Ks. And you think about it, most investors that are typically averse to a $600 a year price point. But there you have it. It's a $3.2 billion exit. Amazing.
Yeah, no, you're absolutely right. So some super quick fire stats. When do you think you should hire your first VP of sales?
After the founder has made the first 20 sales, him or herself.
And good. That's an interesting answer. Now, on terms of market segment, you mentioned there's no one path to market. Do you have a preference?
Yeah, I think the mid-market is the easiest to start with.
Do you ever worry in the mid-market that you get seduced? My problem with the mid-market personally is that it's easy to get to like between 5 and 10 million in ARR, but then once you have to start comping that, the TAM needs to be massive and you sort of get sucked upwards into the enterprise, and sometimes the architecture or the business is not designed for the enterprise, and you face this sort of existential question right around like the 10 to 20 mark.
I think most businesses should move into the enterprise if they start at the mid-market. But it is very difficult. It's very difficult. The classic example is New Relic and AppDynamics. So New Relic kind of started with a $6,000 annual price point, and after they went public, has been starting to move up into the enterprise aggressively. And AppDynamics started with an enterprise level price point. I think it was like $100K or something, and it started to move down. And those are huge stresses on the organization because the sales motions all of a sudden are different, and then the products that they need to build are different. And those transformations are painful, but I think to build really big companies, you need to go through them.
And then I think even as I was reading a couple of weeks ago, I was reading your blog post comparing those two IPOs. And I think the conclusion was, there are some differences in sort of like the capital efficiency of the business and the sales productivity of the business, but they're pretty similar, employing totally different go-to-market strategies.
Yep, exactly right. Exactly right.
Yeah. So what advice do you have or books? One part of the podcast that we want to do, if somebody wants to become you in 15 years or 10 years, you've clearly just devoured, speaking to your wife's point about intellectual curiosity. You've sought out mentors, you've built networks, and you've read a bunch of really important and interesting books. Are there any specific habits or content or advice that you want to give to the audience so that they can excel in their careers?
Yeah, I love this book about the learning mindset. I think it's Susan Dweck and this notion of grit. She's a researcher at Stanford, and she said, actually, you know what? Let me summarize it like this. Josh Reeves from Gusto, we were talking to him a long time. I was talking to him a long time ago. We were in the car, and he said, I was saying something about a problem I had, and he turned to me, and I'll never forget it. And he said, it's not a problem, it's a puzzle that you have to solve. And just that slight change in nomenclature completely changed my attitude toward it. And so I think that's really important. It's that growth mindset. It's like willing to accept the challenge. And just Ben Horowitz writes about this in The Hard Thing About Hard Things. It's all about like the struggle and the willingness to endure through a difficult time and learn from it. I think that's one thing that I really admire in founders.
It's great advice. Tomas, if anybody out there wants to sort of get in touch with you or learn more or reach you in some way, is that okay? And what's your preferred medium for that outreach to occur?
Yeah, of course, that's okay. My email address is on the website. It's ttunguz@redpoint.com. Anybody feel free to email me and I'll definitely get back to you.
Wonderful. Tomas, thanks so much for joining the Sales Hacker podcast, and congrats on all your success. It's wonderful to see.
It's a privilege to be here. Thanks so much again for inviting me, Sam.
You're welcome. Talk to you soon. Hello, friends. We're here with Sam's Corner. Tomasz Tunguz, a really exceptional human and a great investor, self-taught, self-built, who started his career as a salesperson down in Chile before working at Appian, then moving to Google. You heard that he built his own CRM for Google that they ended up using called Toothpaste, and then moving on to Redpoint, where he's made a number of successful investments and sat on the board of Axial, a company that I worked at from 2010 to 2015. So what do we take from Tomas? There's a lot to take, but here's what I would encourage everybody out there listening to absorb. Tomas is a voracious reader. He reads and just looks. He's a learner. He's a constant learner. And so if you read his blog or if you follow what he says, he's always referencing some new book that he's read. He reads both the classic business texts, like, reading about Michael Porter and Porter's Five Forces, and then he'll read, fiction and, other more creative literature. And so that's just thing number one. We talk about it a lot, but please read, please go out and find books and make yourself better, because it's free information. It's a free way to get experience from other people. So that's one sort of general piece of guidance. But here's something very specific that nobody does. And that is what Tomas does, which is he breaks down the financial statements of publicly traded companies in his world, which is SaaS. So I don't know if you know, but if you don't, the public financial statements of all of these companies like New Relic or AppDynamics or Salesforce or Cloudera, they are all online. They're all free. So you can read their 10K, you can read their 10Q, you can read their various filings. And within the 10K, they tell you they're obligated to list who are their competitors, what's their go-to-market strategy, what do they perceive their major risks to be. That's all free information, whether you're in a specific space and you're competing with a public company and you want to know what's their strategy, or you just want to understand how our business is built and how do management teams think about strategy and think about articulating that strategy. Well, there's free information, and it is the 10K financial statements of publicly traded SaaS companies. So make use of the free information and the competitive intelligence that's out there. This has been Sam's Corner. Thanks for listening. To check out the show notes, see upcoming guests, and play more episodes from our incredible lineup of sales leaders, visit saleshacker.com and head to the podcast tab. You'll find us on iTunes or Google Play. New episodes tend to come out every Tuesday. And if you enjoyed this episode, please share with your peers on LinkedIn, Twitter, or elsewhere. Really do share it on LinkedIn. We would love it. We would appreciate it. Otherwise, just tell people about it. And if you want to get in touch with me, find me on Twitter at SamFJacobs or on LinkedIn at linkedin.com/in/SamFJacobs. If you want to know more about the Revenue Collective, which is the global group of VP and above sales executives and marketing executives that we're bringing together for thought leadership and career advancement, let me know that. And if you're just a fan and want to touch base and have some feedback about the show, let me know that as well. Once again, big shout outs to our sponsors. That is AirCall, your advanced call center software, complete business phone and contact center, 100% natively integrated into any CRM, and then Outreach, a customer engagement platform that helps efficiently and effectively engage prospects to drive pipeline and close more deals. I will see you next time.